Hi everyone, thank you for joining today's webinar. Today's presentation is going to be hosted by John Regan. He's the Senior Strategic Alliance Manager at Avalara. We've been working with him for years now and he knows mostly everything about sales tax, so you guys are in good hands. John, feel free to take it away.
Thank you, Kimia. What an introduction. I appreciate that. Sales tax is quite complicated. So I can't claim I know most of everything, but I can connect you to the people who might. And I appreciate being here. I appreciate everyone joining us this morning. We've been partners with Arbella, and I appreciate that as well. I've been partners for a long time. So let's get into this, and let's talk about what we're going to talk about today. And we're going to talk about, let me get my screen together here. We're going to talk about last year in review, the changing tax landscape, everything that's happened after that Wayfair ruling. We'll talk about what e-commerce sellers need to know when selling internationally. We'll talk about technology and how it can impact how you handle sales tax and what all these changes mean for you. So let's get into it. 2019 in review, the changing tax landscape. Does everyone remember or does this picture ring a bell? It's the Boston Tea Party back in 1773. What that was all about was this mantra of no taxation without representation. Now, what happened in 2018 from the Supreme Court in South Dakota versus Wayfair was this concept of taxation without representation. Two very seminal things as far as tax compliance in the United States, two very different results. What they do have in common, though, is they both started a revolution. The Boston Tea Party started the American Revolution, and South Dakota started this revolution around tax compliance and determining whether you have nexus in a state or not. That revolution is economic nexus. You may have heard of it. What is it? Well, economic nexus is a tax collection obligation imposed on sellers based on their level of economic activity within a state. This Supreme Court ruling undid 50 years of precedent around sales tax compliance. Previous to the ruling, your liability to a state was based on whether you had a physical presence in that state. Now it's based on your level of economic activity and called economic nexus. Like most sales tax laws, economic nexus criteria it varies by state, but all states aim to level the playing field between non-collecting out-of-state sellers and brick-and-mortar businesses within the state. So here's this economic net revolution that happened. Since it started back in the summer of 2018, states were quick to adopt it. Why? Because states see this economic nexus concept as a new revenue windfall. A lot of states are cash poor. In fact, over 30 states are operating in deficit. So these cash-starved states see this as a way to get well, to go from the red to the black. So by the end of December of 2018, 21 states had adopted economic nexus laws. By the end of last year, 1 year later, 43 states have. Missouri and Florida are the only two holdout states right now. This is what the map of this activity looks like. You can see at the end of 2018, beginning of 2019, there's a relatively moderate amount of blue states here who have adopted economic nexus. And then look at the end of last year. Almost all states had adopted economic nexus, except for some states that do not have sales tax, those we call the nomad states, New Hampshire, Oregon, Montana, Alaska, and Delaware. They don't have sales tax. And then there's Missouri and Florida, which haven't adopted theirs yet. So what's up with Florida? Well, there's a proposed bill sitting in the Florida legislature that would set the economic nexus thresholds in Florida at 200 transactions of tangible personal property or $100,000 of sales in the previous year. This is the second economic nexus bill to be filed in Florida, so it's coming. It's been political issues that have stalled things in Florida, but you know what's coming. Florida is one of our largest states economically speaking. The amount of businesses done in Florida. It's only a matter of time, probably a few months, before Florida will join the list of states that have adopted economic nexus. So will Missouri show me economic nexus? Missouri is complicated. Over 2,200 local jurisdictions. Some of them overlap. There's a lot of leeway that Missouri has given to these local jurisdictions. So in Missouri's case, it's not political. It's more like, how do we get this done because it's so complicated? But again, it's coming. Now, here's a really important point I want to make. These economic nexus thresholds vary by state. When it all started with South Dakota came up with the thresholds of $100,000 in annual sales or 200 transactions. But and most states, when they started adopting economic nexus laws, just copied and pasted what South Dakota had put in place because it was approved by the Supreme Court. But not all states did that. For example, in California, there's no threshold around the number of sales transactions, and the number or the amount of revenue that triggers California's threshold is $500,000 in annual sales. It differs. In North Dakota, it's just $100,000 in sales. There's no threshold around the number of transactions. In Kansas, it's all remote sales. There's no thresholds. You sell into Kansas, you need to collect and remit sales tax. This is what makes it complicated because these rules vary by state to state and they're changing. And we need to remember the physical presence doctrine that had been around for 50 years prior to the Supreme Court ruling. It's still there. The Supreme Court ruling didn't get rid of it. It just moved physical presence as a secondary determinant to nexus. So if you have remote employees in a state, warehouses in a state, a board meeting in a state, if you go to trade shows and you make sales, all these things represent your company having a physical presence in that state, and that will be a trigger to nexus if you don't have economic nexus in that state. Now, I know there are a lot of manufacturers in the audience. This affects manufacturers. Manufacturers who sell not taxable sales, tax-exempt sales are affected. A lot of manufacturers might think, well, the Supreme Court case deals only with taxable sellers. Well, no, it does affect non-taxable or tax-exempt sellers. Here's two case studies. There's a manufacturer in New York who sold to other OEMs or resellers. The net effect of the Wayfair ruling increases their burden to prove that they don't have to charge sales tax, that they're exempt sales. That proof comes by way of an exemption certificate. So prior to the ruling, this manufacturer in New York had to manage 75 exemption certificates. Now they need to manage an exponentially greater number of exemption certificates, over 1,000. We see this all the time at Avalara. Another case study, a national wholesaler who sold to end users. The primary method of shipment was using drop shipment. Wayfair grew their nexus from just a few states to many states. They were having to manage only 500 exemption certificates. Now they need to manage over 5,000. The effect of the Wayfair ruling is exponential on a company's compliance process. By exponential, I mean, like I said, we see this all the time at Avalara. This is what we do for a business. We help companies deal with this sea change in tax laws. The typical company prior to the ruling when tax obligation was based on whether they had a physical presence in a state, that typical company might have had nexus in, say, 3 states. They might have, say, a headquarters in California, a warehouse in Texas, and a physical presence in New York State. Now, this ruling, like I said, exponential effect. This typical company now, you have to look at your sales and how much you're selling into each state and how many sales you have into each state and what each state's rules are, what their thresholds are. Typical company that once had nexus in 3 states now has nexus in 13 or 23 or 33. It's a big change. And and with this slide here, you're selling tax exempt. You may not have to do that much around sales tax, but it's those exemption certificates that you got to watch out for. An interesting fact, in an audit, typically the first thing that an auditor looks for is valid exemption certificates. If you don't have all of them on file, then it's up to you, the tax exempt seller, to prove that you didn't have to collect and remit sales tax. So the burden is on the company in that case, and if you can't come up with the exemption certificate, you as the what you thought was a tax exempt sale, you have to come up with the sales tax on that sale. So let's talk about briefly here e-commerce sellers and international sales. There's a lot that international sellers need to know about tax. There's a lot going on across the pond. Brexit. Brexit is going to make it more difficult to sell into, for us to sell into England, for other EU companies to sell into England, and vice versa. There's a lot going on around low parcel relief, meaning VAT will apply to all states. And there's a lot going around marketplace sellers, the Amazons, the Etsy's of the world, internationally as well as here. Governments want the marketplace sellers to be responsible for the tax of all the companies that sell through that marketplace. A lot of court cases going on around that. So now let's touch on technology and sales tax. Back several decades, probably 20 years ago, there was a group of states that got together and they formed the Streamlined Sales Tax Governing Board. The goal was to make sales tax easier to handle, compliance easier to handle for the typical company in those states. So what they came up with was a standard way of, or standard definitions around products. What is a grocery item? What is candy? What is this? What is that? So with those standard definitions, you can apply sales tax more easily because it's looked at the same from state to state. So what happens is the SST, or Streamlined Sales Tax Board, will certify service providers. Avalara is one of them. To work with the companies in the state that qualify for this program to deliver the services, like Avalara services, to the companies at no cost to the company. Yes, I just said you can get compliance automation for free through the SST. So Avalara is a CSP, or a certified service provider. What happens is we provide the tax rates, the return service, the exemption certificate management, all for free, and the governments pay us to do that. It's a pretty good deal. There are certain requirements here at the bottom of the screen that a company would have to meet in order to be a part of this program, but it is a pretty good deal. And you would think this is a great deal for Avalara, and it is, but we do take on the burden of getting it right. All the company has to do is collect and remit the sales tax, but if that sales tax amount is wrong, it's up to us to be responsible for that. Where's the SST, Streamlined Sales Tax, going? It's going to do nothing but grow. Pennsylvania recently adopted its own version of the CSP program. Then there's Connecticut, Illinois, New Mexico. They're also looking at their own programs. So states are trying to make this a little bit easier. Certain states are trying to make this a little bit easier on remote sellers. Then there's AI, there's big data, there's cloud computing. They all can make managing tax more efficient. They can make tax less taxing, so to speak. Many businesses are turning to these new great technologies, and we did as well. Avalara is a cloud computing company. We were born in the cloud, and let me show you how that works. So let's start with this chart over here on the right side. That's the government, and like I've been saying through this presentation, the government in the states keeps coming up with all these crazy tax rules and rates. sales tax in this country is difficult compared to most other countries in the world because our country was founded on states' rights. So someone, if you want to automate this, needs to keep track of all that. And that is what Avalara's job is. We keep track of all of the rules on the different products and how they're defined, rules as to whether they're taxable or not, and from state to state. We keep track of all the 12,000 sales tax jurisdictions and their boundaries across the state. We maintain all the sales tax rates across the country. There's over 350,000 of them. So what happens and how this automation kicks into gear, let's move over here to the left-hand side of the chart. You're probably using an ERP in your business to run the business and keep track of your sales transactions and to handle that. Or you're using a shopping cart, or maybe a point of sale system. Let's say it could be a Microsoft system, and you work with Arbella on that. Maybe you have a shopping cart, maybe Shopify or Magento. Well, you have that sales transaction that happens. At Avalara, we call that the magic moment. What happens is the sales transaction will be recorded in your ERP, shopping cart, or point of sale system, and it'll go up to the cloud. And we have over 700 connectors pre-built that will take that data from whatever system you're using. Again, 700 different systems that have pre-built integrations. And that data will flow up to Avalara and our product called AvaTax in the cloud. AvaTax will catch that data and say, okay, we have a sale here. Let's validate the address so we make sure through latitude and longitude, right to the rooftop level, of where this transaction is occurring, because we need to take the information within that tax jurisdiction where the transaction is occurring and determine, okay, what are the rules around it? Is it taxable? Is it not taxable? If it's not taxable, AvaTax will turn to another product that we have in the cloud called CertCapture. And it will say, hey, CertCapture, we don't have, or do we have an exemption certificate on hand for this particular customer? Because it's not taxable in this situation. If there isn't an exemption certificate on hand, CertCapture will reach out to the customer electronically and ask for that exemption certificate and bring it in. Now, if that transaction is taxable, then AvaTax continues its logic and says, okay, in this jurisdiction, the tax rate is this. And then it tags the tax rate along with the other data about the sale and sends that back down to the ERP, shopping cart, or point of sale system. So then you have a complete sales transaction, complete meaning it has sales tax associated to it. Now this round trip happens here in the blink of an eye, less than a second. So you've probably gone through this process today already. Did you purchase anything today? The company that you purchased from, if they're using cloud computing to automate their compliance process, it probably followed a process like this. So to me, that's exciting. To you, maybe not. But I hope you're paying attention because there is a quiz on this on Tuesday. But anyway, next time, what I want to leave with you on this portion of the chart is that the next time that you make a purchase and you look at the receipt and you see sales tax on the receipt, this process is where that sales tax number probably came from. So all that is well and good in the world of Avalara, but remember we have all that sales tax transaction data up in the cloud. So when it comes time for your company to have to file tax returns, we can sort and provide reports on all your sales transactions during that taxable period. So monthly or quarterly, whenever you have to do tax returns, we can send down this liability worksheet, we call it, that shows you by jurisdiction exactly what you sold in there and exactly what your tax liability is. Now that's golden to the typical CFO or controller because it takes away the burden of the accounting that is placed on the accounting department to have to keep track of all that transactional data and gather it together from oftentimes disparate systems and put it all together and then put it on all the different tax returns that must be filed in all the jurisdictions in which you have nexus, All that can be automated with a push of a button. You can take that liability worksheet, touch the go button, and then all the data is mated with the appropriate forms in each jurisdiction, the tax return forms, and the tax returns go to the jurisdictions electronically. So does payment. We have accounts set up with each jurisdiction to handle the payment, which is sent electronically too. So what you're looking at here is end-to-end compliance. It takes that compliance process, which can be defined as high risk, no reward. Think about that, high risk, no reward. Why would any company want to process under their roof that can be defined like that? Well, it's just the way companies have done business until now with the advent of cloud computing. We can take that process, outsource it, automate it, and now a company gets rid of the risk and now can use those valuable accounting resources to a higher and better use. So what do all these sales tax changes mean for you? Well, it means that managing sales tax, it's going to grow more complex, and you don't have to carry that burden. Your nexus footprint is probably much larger. You don't have to do that anymore. Automating sales tax calculations and returns and exemption certificate management, bottom line, can ensure that you're compliant with the latest laws and free up those valuable accounting resources. What this means for you, well, now the risk is real. The states are hiring, like I said, many states, over 30 states, are in deficit. They see this Wayfair ruling as a new revenue windfall. They'll get from the red to the black if they can hire enough auditors and get their systems together, and that's exactly what they're doing. States are even communicating information, data about sales tax payers, different companies, and they're cooperating so that they can take full advantage of this new law. So what we think we're going to see in the future is more headlines such as this, which was recently in the Philadelphia Inquirer, where California hit a Philly area Amazon seller with a $1.6 million sales tax bill. This is real. If you're a company or if you are living under the assumption that, hey, I've never been audited, why should I worry? You may want to rethink that, because things are definite. This whole sales tax landscape has changed. In sports parlance, what the Wayfair ruling did was move the goalposts. Everything has changed, and your compliance footprint has changed. Why would you automate sales tax management? I've talked to this over the slides, but basically it's common sense. There's increased accuracy. It's more efficient. You're going to get around that risk that now exists. You're going to be more satisfied with your systems, and this will help you handle your growth. As you grow and you expand into other states, you're going to gain more complexity in your compliance process. This is a way to help to deal with that, and so it's not a headache as you grow. Why would you consider Avalara? We're plug and play. Like I said, we have over 700 pre-built integrations into just about every ERP, accounting system, e-commerce package, you name it. We plug into everything that you're using from Arbella, for example. We're global in over 167 countries. We're battle tested. When every year, when it comes to Black Friday and Cyber Monday, those are our Super Bowls. If you think about how many people are purchasing during those 2 days, it's incredible the amount of transactions that we process. Hundreds of thousands of transactions a second. So annually we do over 6.7 billion transactions, almost $30 billion in returns that are processed, and 18 million tax documents, such as exemption certificates, that we manage. When you automate this process, think about it. It's kind of a common sense thing. We call it similar to when companies started to automate the payroll process back in the 80s. Now, if you walk down the street and you knock on a few doors of companies, you'd be hard-pressed to find a company that doesn't automate payroll, right? Well, that's what's happening with sales tax. The companies are adopting this idea of automating the process, and it's happening much faster than the adoption of payroll automation did. Why? Because we have cloud computing now. Back in the 80s, we didn't have that. And finally, this has just been peace of mind. You can grow without additional compliance burden. You can, if the auditor walks in the door and sees a system like Avalara, they're less likely to hang around because the auditor is incented to find errors. And they see a system like Avalara, they know that you've got your act together, so they'll move on down the road. So you can learn more about that at avalara.com. So thank you for being here again today. I'm wondering if there's any questions out there that I could possibly answer.
Yeah, we have a few. Let me just pull them up really quick. So one of the questions says, what does Avalara cost?
Oh, good question. So when you're looking at the cost of this, you have to consider what you're paying now. You're paying one or more people in accounting, and if you're an enterprise type company, you might be paying a staff of dozens to hundreds. The cost you're paying now would be the cost and salary that is required for these people to do the compliance job. Studies show that in the typical small to medium-sized business, companies paying about $70,000 in salary for people in the accounting department to handle compliance. If it's an enterprise-sized company, studies show the cost is closer to $400,000 annually for a team of people to handle compliance. So you take that and you have to think about, okay, I probably won't get rid of those people if I automate that process. We certainly don't condone that. It may happen, it may not, depending on your business situation, but you can use those people for a higher and better use. Think about this burden on the accounting department. The accounting department is, in effect, acting as a de facto government agent in having to handle this process. It brings no revenue into the company. It only brings risk if you don't get it right. And sales tax is so complex, you're probably not getting it right. So you have to look at that and say, okay, can I quantify this reduction in risk? Can I quantify the fact that I'm going to be putting my accounting resources to better use? That would be up to you to decide. But as I said, a lot of companies are taking on this automation process. As a matter of fact, I was going to mention this in the previous slide. In 2 short years, there will be the same amount of companies automating compliance, tax compliance, as currently outsourced payroll. That's how fast this is growing. Avalara, as a company, will go from $350 million in annual revenue to over $1 billion in just 2 short years. So you have to weigh these all into account and ask yourself, do you want to go down this road in automation? I want to get back to that thought about this automation idea around compliance process being inevitable. Our typical company that comes on board with Avalara doesn't leave. Once you automate this process, it's like automating payroll. You don't go back to a manual process after you've done it. We consider our customer to be with us for a minimum of a decade. That you just don't go back once you do this. So that points to the fact that, hey, this is probably the way to go if I'm really going to embrace technology and grow. So again, this goes into your decision. But to answer the question directly, how is it priced? It's priced on the number of transactions that you require our software to process, the number of times that you ping the cloud, the number of returns that we'll have to process, and the number of exemption certificates that we would have to manage. So the pricing is all transaction based. And then those transactions are broken into pricing tiers. So we try to keep you within a certain tier. And if your business is growing and you are going to the next tier, the per transaction price would of course go down at that higher tier. And we would give you a fair warning about if you need to move up or down in your pricing tier. So I hope I didn't over answer that, but that's my answer.
Thank you. Yeah, and then so our technology partner is Arbella. How do you work with them?
Yeah, we've been partnered with Arbella for years, and Arbella is we partner with all the technologies and out there in the ERP space, but we're proud to work with Arbella because you're our leader in that space. As I said, we have over 700 pre-built integrations. We have a connector integration built for every system that Arbella provides. And we work hand in hand through the implementation process with Arbella.
Right. Awesome. Well, we have one more question. How does the implementation work for Avalara?
Okay, good question. Remember, we have over 700 pre-built integrations. So the building of the software, that's not a concern here. So to an accountant, a CFO or controller who's in charge of the compliance process, you could look at automating the process as low-hanging fruit compared to implementing an ERP. Our implementations are measured in weeks or months, not months or worse. It can be done at the speed that you desire. Some companies, depending on the size and the amount of compliance complexity that you have, you can handle it over. I've seen a company say, okay, we're going to handle this for 2 hours a day, from 5 to 7 p.m. We're going to take this on and get it done in a week or two, or we're going to do it over a weekend. Whatever makes sense for your company as far as implementation goes, that is in your capability to use. The main thing that takes up the most time in the implementation is mapping your items to our item codes. And if you have a lot of items or it's complex, you're not sure which item code to pick, we have wizards that you can use to help with that process. So that's what takes the longest amount of time. If you're wondering where you have Nexus, we can help with that. We have online tools that if anybody's interested in a link to that online tool, I'd be happy to send it to you. But what it does is go through each state and it shows you what the economic nexus thresholds are, and then you can plug in your sales transactions and your sales revenue into that state for the previous year. And you can look at a map that will show you where you have nexus. It's a heat map. And where you're likely to have nexus soon because the sales are approaching the economic nexus thresholds, and where you don't have nexus. And so from there, you now understand where you have nexus, where you don't. You may have to register in new states. We can help with that. You may also have some risks, some liabilities to state, some exposure. We can help with that as well. We can do an exposure analysis to find out exactly which states you're at risk for and represent you when you register in those states, and help the negotiations by saying, we're working with this particular company. We'll reveal the identity of the company if we can reduce this $100,000 bill in tax owed plus interest and penalties down to $40,000. So we do that all the time for companies. And so we can get you registered in the state and handle your exposure in that manner. And then pretty much any service around tax we can help with. Or we can point you towards tax advisors, CPAs, who can answer your questions. So all those services are available.
Yeah, and then last question, can you talk about your experience with integrating with Dynamics 365, Dynamics 365 Modern Point of Sale?
We have over 700 integrations, so I personally don't have any experience with a lot of them because I'm also on the alliances side, so I'm not a technologist, so to speak. But I'll tell you, our company has experience with it. And, if whoever's asking that question, I can get back to you with a more detailed answer from someone who would be more knowledgeable in that arena. But we've likely touched on an integration with it. We're coming out with new connectors. I get an email, twice a week that says, we're now integrated into such and such technology. So I can get back to you on that.
Right. Thank you so much, John. Thank you for your time. It was a great presentation.
Great. Thanks. I appreciate everyone being here. And again, reach out to me if we can help in any way. Thank you.
Thanks, everyone. Have a good one. Bye.
Bye-bye.